Hey guys, Tony, good morning. I guess this video is more for my Patreon members because they have access to the reverse MACD, right? And I think you could only do this. Well, not really. I guess you can do this without it. But I guess an earlier entry would have been with the reverse MACD, right? And the stochastic combo. But I guess this is just for everybody, right? I want to explain a strategy that I use that I kind of I guess it was actually shared by somebody that I know who's done fairly well in trading, and the strategy is called Pattern X. And essentially what this is, I mean, it's kind of obvious, right? See, Pattern X. Actually, I'll do this from the beginning, but this is actually a really, really, really good pattern, and it has a really high chance of like a really high accuracy rate, right? Which is fantastic. Um, Basically what this is you're looking for a ticker that has a pattern that has a W pattern, basically. Well, not a W, it has a, what would I say, kind of like a cup and handle pattern ish. Because usually what you want to find is, this is already an extended pattern, right? Usually what you want to find is, let's go with, let me see if I can replay this. Where is my bar replay? Here we go. So let's put it right. Stop it right there. There you go. That's what I was looking for. So, ignore this little bar. We don't really need that right now. Just focus on the screen. I wanted to give you guys an example, right? So the pattern that we're looking for is something like this, where you have, a really long extension from the top. This usually happens in crypto, really, but there are a lot of other like patterns that end up being this way. So we'll stop it right there because that actually got created. Boom, right there. So that's perfect. So pattern X is a very, very, very simple pattern. It's a very simple candle structure to look out for, right? What you're basically looking for is a high, right? You're looking for a very, very big high, a very high, and then you're looking for another sort of like a lower high, right? That's kind of what we're looking for right now. Whoops, don't need that. That's what we're looking for. We're looking for an extended high, and we're looking for a lower high. And then what's going to happen with this, you basically just grab a trend line, right? Your trend line, and you create your first trend. So from the top of the wick, right, down to this wick right here, we're going to make sure that it's touching the very tip of that wick, right? So very tip would be right there. That would be the very first wick right there. That's it. The second portion of this would be the higher high, so higher low, right? So this is a high, sorry, this is a high right here. Sorry if I'm not explaining it all that well. I'm not, not the best teacher, but you have a high, and then you have a higher high right there, right? So now we can get rid of these. And you're looking to add a top of the trend right here. So again, wick, right? Top of the wick. You extend it all the way out, and you make sure you're touching this top of the wick. And that second candle wick is always gonna be the middle portion of the X, right? And now you guys are gonna realize why it's called Pattern X, right? Pattern X, right? We don't really care about the trend on the bottom portion. If you have an uptrend, this is actually a lot better. So, I prefer to have a consistency of uptrends, even if it's gradual, right? So there you go. You have, kind of a sort of gradual raise right here on the uptrend. But for the most part, you're really only focusing on this trend and then that one. That's it. The bottom part, it's better if it has, if it's a low and then a low. If it has a low and then a lower high, then that's fantastic. But really, there's only a couple things that we're looking for. You're looking for a pattern X like this. So pattern X, right? Top of the wick to this wick, and then from this wick to that middle point of the X, right? That's exactly what we're looking for. If you're part of the Patreon, you are able to catch these early. You actually had a bullish week close right here, right? You have that bullish week close on the reverse MACD, and guess what? The stochastic is already creating bottoms. You have the blue MA above the red MA. So, everybody from Patreon, you would have had an entry of 9 cents if you would have caught on to this, right? Usually I say wait for confirmation. So I would have probably, I would have probably waited till we actually cross this trend right here, this downtrend from right here. So after this is broken, I would have probably gone in. And what happened the week after? Boom, right? You have confirmation, you broke trend, the downtrend, you created a candle up here to 13, right? And what happened now? And now you're still running up, right? So the key point of this is that you're looking for that trend break, or if you want to be a little bit not riskier, because the weekly on the reverse MACD is pretty accurate a lot of the time. So entry at 9 cents would have been really good. But again, pattern X is to show you where your take profits are going to be, right? So you would have your first take profit. Actually, let's play this again. Let's see where it goes. Play, boom, there you go. And that's where we are right now, right? So to show you guys that would happen, your first take profit would actually be here, right? First take profit would be where the candle actually touched that, what is it called? Actually touched the, what is it called? The trend line, top of the trend line right here. So your first TP would be at 23 cents, right? And if you would have gone in and, if you would have gone right after we closed that bullish week, you would have gone in at 9 cents. This would have already easily been 100% gain. If you would have gotten in after confirmation, you would have been, actually, I don't know what that percentage is, right? You would have made a 70% gain. So even after confirmation, after you actually, waited till downtrend was broken, you got in right here at 13 cents, you would have made a 70% gain off of pattern X, right? And the crazy part is your next TP would actually be at the next top of pattern X, would be right here, right there. So your next TP would be 40 cents. If this uptrend actually gets broken to the high side, because keep in mind, after you're in this part right here, you do have resistance, right? So now there's two things that can happen. You either break trend and keep running up here, or you don't break trend and you possibly go down to like here to retest, and then you go like back up here, right? There's only a couple things that can happen, right? Something like that. Usually when you have such strong momentum, like look at the stochastic, you still have all this room to run to the upside, right? So I would have to weigh that it's probably gonna break trend, it's probably gonna break this trend right here and keep running closer to like 40 cents. So just on that, if you would have gone again right when the reverse MACD told you to, you would have made from 9 cents, you would have done a 150% gain on the 23 when it hit, and then a full 330% if it runs all the way up to to second TP, which is the previous all-time high, if it breaks this trend right here, if it breaks trend. Or if you would have waited till confirmation for a candle to break that downtrend from right here to here, you would have gotten in at 13, like right there as soon as it closed. So right there, 13.7, you would have gotten in. First TP, you would have made 70%. Second TP, you would have made almost 200%. So either way, you're doing extremely well, and it's a very, very, very simple pattern, right? It's only two trend lines. And your first TP is as soon as your candle hits that trend, you can take off like 50% off, you can take 10% off, or if you think that there's a high chance of it going to 40 cents, you can basically just, you can wait and take everything out at 40%, at 40 cents, right? So it's a very, very, very simple pattern to understand. But a really good thing to see also is right now, right? Where are we on the daily, right, for the bullish? You actually just closed a bull candle yesterday. And you're on, support, you're on, you're about to break trend. And keep in mind, on average, you do see, about one more day of bullish momentum. So if I had to guess right now if it's going to get broken, I'd say yes. I'd say more than likely, opacity is going to be breaking that trend, right? But also the 4 hour looks like you're going to have a 4 hour, bearish trigger also. So, you have to look at a lot of different things, right? So as soon as it hit here, I can maybe see it coming back down to 17 cents before running up again. So yeah, you have to, that's only if you have like the reverse MACD, right? There's a lot of things that can happen. But again, basically you would have had perfect entry at the 9 cent mark, or if you waited for confirmation, you would have entered at 13 cents. First TP is when candle hits that first trend right here. Second TP would have been the previous all-time high wick right there. That would have been your second TP. But again, you have to look for this pattern specifically, right? It has to be a pattern where you have not necessarily not a W, but it would have to be, let's go back a little bit. So pattern would have to be, see if I can, there you go. So, pattern would have to be like this, like a very long extended W from the top. So kind of, how it's kind of like a W like this, right? That's kind of the candle structure that you're looking for. Like the left side of the W has to be very overextended. Create that first part of the W, and then the second part is like, oh, okay, you know what? This looks like it might be a W if it keeps running up here. So it's like an unfinished W with a very long extension on the left-hand side. So, this is a pattern that if you guys can backtest it, right, you guys can use this to your own heart's content. For the most part, it's been, extremely accurate. And, this was actually shared to me by a very, 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 very successful trader that I know, and I use this pattern all the time for take profits, and it works extremely well. So with that being said, it's I'm giving it to you guys completely free. This is something that I should probably charge like 10-20 grand for, because you can literally just trade this pattern, and you can your win rate will probably be like 80%, 90%. Like it's extremely accurate, right? So I don't share things, and I don't put things like on my name unless they don't work. So you guys already know that I already put in the breakout strategy. You could even, if you're in stocks, you can even use a breakout strategy as soon as this hits, right? As soon as this 19 relative high gets broken. Not on crypto, right? But on stocks. But again, there's like a lot of things, right? The breakout strategy, I'll put to my name because I know that it works. My reverse MACD, my custom setup, I know that it works, so I'll put that to my name. And then this is the third strategy that I would add to my arsenal, right? Or that I would back it up by my name, because I know that it works and it's accurate. So Pattern X, extremely, extremely powerful strategy. Once you understand it, once you learn it, you can literally just trade this, and you would be, you'd be basically set. But the issue here is that not a lot of people are, patient enough to just wait for these pattern structures to happen. So it's kind of sad to see such a successful strategy that's extremely simple, and people are like, oh, I gotta constantly trade. Oh, what if I gotta trade this, I gotta trade that. And I'm like, I told you guys with the breakout strategy, that's not something you trade every single day, right? You gotta do it on the weekly. You gotta wait for certain things to happen, and then when it does, you go all in, right? And even if you're in my Patreon, you guys know that we missed out on a couple, right? We missed out on Tesla's recent breakout. We missed out on I think Walmart. We missed out on a bunch, right? But again, the breakout strategy has to be used for, it's not something that you use every day. It's probably going to come to you maybe like once, twice a month or something, right? Because you're using the weekly. And for this one, the same thing, Pattern X. It's not something that you'll be able to find every single day. And I don't know how accurate it is on smaller time frames. I usually only use it on the weekly because there's more gains to be made on the weekly. But again, don't overtrade. Wait till it looks perfect, right? Look through all the tickers. Wait till it looks absolutely perfect, and then take the trade, initiate. But yeah, this is Pattern X. This is something that like I said, it was passed down to me from somebody from a very successful trader. Not something that I wanted to share, but whatever, dude. I got you guys. Yeah, I'll see you guys later. Bye-bye.